Greetings everybody, I hope that you guys are good. Today we're looking at a very easy trading strategy for those of you who actually don't have time to trade at all. As you guys know, many of us spend many hours in the workplace, and some of you are in workplaces where you are not at all able to look at charts, or you don't want those that you work with to know that you are trading, right? Some of you stay in different locations where when it's quite conducive for you to be trading or for you to be making trades, the time that you're in is such that it doesn't actually make sense for you to be trading, if you know what I mean, right? So I think this strategy will help a lot of people. It's a very simple strategy, and it is based on support and resistance for the most part, as well as finding entries on the 4-hour chart, right? So without wasting any further time, guys, let's get into the strategy. I will actually make 1 or 2 examples of the strategy, and then we'll take it from there. And if you guys would like me to create more examples, I will do so in the future. But for now, I think let's look at 1 or 2 examples and let's see how it goes, right? Anyway, the first thing that you're going to do in regards to this trading strategy is open up your weekly chart. And on the weekly chart, the first thing that we're going to do is look for obvious support and resistance levels, right? So I'm just going to mark my levels, so just bear with me, guys. Let's see. So by the way, we are on the Nasdaq chart, as you guys can see, and I am on the weekly chart, right? So I'm just gonna mark my support and resistance levels, right? And we're marking the ones that are obvious, right, guys? We're marking the ones that are obvious. So just bear with me, guys. Let's see. There we go. Let me mark the next one. Let's see. There we go. The next one. Let's have a look. Let's see. And remember, guys, that generally speaking, support and resistance are not lines, they are areas, more or less, right? Let's proceed. Let's see. Yeah, so this should be enough for this exercise, right? So this is the first step, guys. You just mark your obvious support and resistance levels on the weekly chart, and then from here we just zoom in and we look at the most recent support and resistance levels, right? So we can look at the most recent resistance level at this point, and we can just mark it in this manner, right? Just bear with me, guys. We can say that this whole level over here is our most recent resistance level. We can do it like this. There we go. And then similarly, I'm going to mark my most recent support level, and that is where price currently is at. Let's have a look. Right, there we go, more or less. And then the next point I'm going to mark is the next support level as well, which is below the current one. So just bear with me, guys. Right, this is all you have to do, guys. Just mark 3 levels for now, because remember, we are on the weekly chart, but we are going to execute our trades on the smaller time frames, right? There we go, right? So that's it for now, right? So we're on the weekly chart, and we can see that price at this point in time is at a very strong level of support, right? And at support is where we should be looking for potential buying opportunities. We should be looking for potential buying opportunities, as the expectation is, because we've had multiple touches at this level, right? The expectation is for the market to move further up to this level, right? And we should be buying at this point, and our TP should be at that level, right? So what we're gonna do now is actually head down to the H4 chart, because we need to look for confluence actually and confirmation in as far as buying goes. So here we are, guys. We are on the H4 chart. Let's have a look, right? So The only thing that we're going to do in regards to the H4 chart is to wait for a bearish market to turn into a bullish market before buying, right? So how do we do that? So we can currently see that in regards to the H4 chart of Nasdaq 100, we have what seems to be a W formation forming, right? And it has a neckline at this point, more or less. I hope that you guys can see that, right? And also, what I would do is I would wait for price to actually close above the neckline of this W structure, right? Currently, we can see that the market is almost in a upward trend in as far as the H4 chart is concerned. So what I would do, guys, is I would wait for the market to close above this level, right, and for the market to head back to the level. When the market comes back to this area over here, I would wait for a bullish candlestick to form, and once that happens, I would buy, and my stop loss would be at this point, right? That's all I do. That's it, right? So let me just repeat that in case that wasn't clear. So I said, guys, that currently we have a W structure over here, right, and it has a neckline at this point over here, right? And what we need to do at this point is to wait for the market to close sufficiently above that neckline and for it to come back to the neckline to test it. And at this neckline, we would wait for price to actually form a bullish candle, and once it does so, that'll be our confirmation and we would buy, right? And our take profit would be the next level, which is the next resistance level, which is this level over here, right? So can you guys see that? And our stop loss would be somewhere just below there, and our take profit would be there. That's all we do, right? Let me do another example. Just bear with me, guys. Let's see. Right. We're now gonna look at UK 100. Just bear with me while I delete these drawings. Right. And similarly, guys, we're just gonna go to the weekly chart. Here we are on the weekly chart, and we're gonna do this very same thing that we did on the Nasdaq chart, right? So what are we gonna do? We're gonna first start off by plotting our obvious support and resistance levels. Let's see. Just bear with me, guys. There we go. That's resistance. And then we have let's see, and then we have more or less support in this area, more or less. And just remember, guys, that support and resistance are not lines, they are more areas than they are lines, right? Let's see the next one. Let's have a look. There we go. Right. Let's see another one there, more or less. Right. Let's see, where else would I put my line? So I think that's enough for now. But guys, as you guys can see, my support and resistance levels are based on rejections at those points. Can you guys see that? They are based on rejections in and around that line. Can you guys see that? Right. If you were to look at the next support level, we're seeing rejections at that point, more or less, right? Can you see that, guys? And at this level as well, we're seeing rejections, right? So that's how I'm plotting my support and resistance lines, right? But just keep in mind, as I said, that support and resistance are not lines, they are areas, right? So from here, we're just going to look at three levels from here. We're going to look at the current level, which is the support level. So just bear with me. We're going to look at this level over here, right? Just bear with me, guys. Okay, we're going to look at this level, right? And then we're going to look at the last resistance level as well. There we go, right? And then we're going to look at this level as well, just in case price pushes further down. We will then be targeting this level over here, right? Just bear with me, guys. Let's see. There we go, right? Yeah, there we go, right? So guys, we can see that currently price is testing this level, which is a support level, and I've said to you guys that it's support because we have multiple rejections at that level, right? And what may actually happen from here is that price may move further up to around this point, right? And we should also be looking for potential buying opportunities at this point, and that is because price is at a very important support level, right? However, in order for us to get an entry, we need to head down to the H4 chart, right? And here we are on the H4 chart. And guys, similarly, we just looked at the Nasdaq chart, right? And I said that all we need to do is wait for a bearish market to turn into a bullish market, right? And that's when we should be looking for our entries. So in regards to the chart of UK 100, we can see that price is also creating what seems to be an overextended W structure, and it has a neckline at that point, right? All we need to do at this point is to wait for price to close sufficiently above that neckline and for price to head back to the neckline. At the neckline, we would then wait for a bullish candlestick to develop and close, and once that happens, we will then look for a buying opportunity, and we would place our stop loss just below here, a very tight stop loss, right? And our target would then be just bear with me, our target would be this level over here, because that's a very strong level of resistance which we have already marked, guys. So this would be our target, right? So I hope what I'm saying makes sense, guys. This is very, very simple. And in the case of selling, let's say for example that on this particular chart of UK 100, price doesn't actually go up but it goes down. What we would then do is we would wait for price to close below this area. Just bear with me, guys. We would wait for price to close below this area, and then for it to head back to the level again to test it. And at this point, we would look for selling opportunities, right? We would wait for a bearish candlestick to develop, and once that happens, we would sell at this point, and we would put our stop losses just above this line over here, just above that line over here. And our next take profit zone, if we can just go back to the weekly chart, our next take profit zone would then be the zone over here, right? As you expect price to move further down, right? So when price reaches this level again, we would do the very same thing, because we would be at a very strong level of support. As you guys can see, we've had multiple touches at that point, right? And in the future, we would look for a potential buying opportunity at this point, and our take profit would be this level over here. And at this level over here, we would look for potential selling opportunities, and in order for us to get those potential selling opportunities, we would have to go down to the H4 chart, and on the H4 chart we would have to wait for a bullish market to turn into a bearish market, and once that happens, we would then look for our selling opportunity, and our stop loss would be at this point, and our take profit would be at this point here. So I hope what I'm saying makes sense. So I'm just gonna do one more example, and then from there we'll see how things go, right? So let's see, let me have a look at, let's see, what can we look at? Let's look at Euro USD, right? So here's Euro USD. As I said, guys, all we do is we look at the weekly chart, right? And we look for obvious support and resistance levels. Let's have a look. In fact, I just want to go to the monthly chart to have a look at this chart properly, right? So in regards to Euro USD, it's probably best to use the monthly chart as opposed to the weekly chart, right? And on the weekly chart, we can, rather on the monthly chart, we can just add our obvious support and resistance levels. So there goes our resistance level, right? Let's see. There goes another one over there, right? Let's have a look. And remember guys, just to emphasize, support and resistance are areas and not so much lines, right? Let's see. Right. There we go. So this is fine for now. So the next point, or the next thing that we're going to do is just highlight all of those levels, not all of them, but the most recent support and resistance levels. This is our most recent resistance level, right? Currently price is at support. Right? And at this point, right guys, all we need to do is, because price is at a very strong level of support, we need to be looking for a buying opportunity at this point, right? But how do we find our entry? To find our entry, we just need to go down to the H4 chart, right? And here we are on the H4 chart. Sorry, let me just go back to the monthly chart. I just want to have a look at it properly. Okay, that's fine. From here we can just go down to the H4 chart again, and on the H4 chart, all we need to do is wait for this bearish market to turn into a bullish market, right? So in order for a market to be bullish, we need it to be creating higher highs and higher lows, right? The moment it creates a higher high and higher low, then we can look for a potential buying opportunity, right? So we can say that, guys, if you look at the H4 chart, that we have at this level we have a W structure which has a neckline at that point, as you guys can see, right? Similar to the previous two charts that we looked at, wait for price to close above the neckline and for it to head back to the neckline to test it. And at this point, should price give us a bullish candlestick, then we would buy and we would place our stop loss just below this level, right? And our take profit would be, just to go back to the monthly chart, our take profit would then be this level over here. Our take profit would then be this level over here, more or less. That would be our take profit. I hope you guys can see that. We would buy over here. Our take profit would be this level over here. At this level over here, we would look for potential selling opportunities again, right? And we would repeat. We would go back to the H4 chart. Right, guys, we will go back to the H4 chart, and at this point, let me just draw that. At this point, we would wait for a bullish market on the H4 chart to turn into a bearish market, and should we get confirmation, we would sell again, and our stop loss would be just above that line, and our take profit would be the zone again, right? So that is all we do, guys, in regards to this very, very simple trading strategy, right? I hope that it makes sense, guys. I think it works very, very well with just about all the instruments out there that you can find by just utilizing simple old support and resistance. And another thing that I wanted to speak about is that you don't have to be looking at your charts every single day, right? You can do your analysis on a Saturday or Sunday, and you can look at your charts let's say once or twice a day. You can look at it in the morning and during lunchtime or in the evening, right? And you will miss some opportunities. So I do recommend that you at least choose 4 to 5 instruments that you have a look at. You don't have to trade all of them at once. The reason why you would be choosing 4 or 5 instruments to have a look at is because if you miss 2 opportunities, you might get another opportunity, because these instruments don't all move at the same time, right? So that is it, guys. And as far as my strategy goes, well, it's not really my strategy, but I just wanted to give it to you. If you practice good money management, and if you practice patience, and you don't ever leverage your account, over leverage your account rather, and if you have a standard account, I would say per trade use 0.1 if you have a standard account, right? And once the market is, let's say, 60 points, 200 points in your favor, just move your stop loss from where it is to break even, and then just let it ride from there, right? There will be occasions where price comes back to hit your stop loss. That's just trading. That's just how it goes. There's nothing that you can do about it. But the best thing you can do is to utilize good money management, right? So that is it, guys. I hope that makes sense. If you have any further questions, or if you would like me to do further examples, just let me know. Peace out, guys.